CNBC contributor Tim Seymour joins us now with more. Tim, great to have you on.
Great to be here, Morgan. Thanks.
First, I just give you some kudos because you were, in many ways, early to the gold trade. You were a gold bug before it became cool. So I do want to get your thoughts on what we've seen there.
It's nice to be cool in some way. Thank you. As someone that's been investing internationally, what I've seen for a long time is the central bank diversification dynamic. I think what's going on with gold and to some extent with silver is it's an asset class designation as well. And whether you're listening to Morgan Stanley recently saying gold could be up to 20% of a portfolio, but Ray Dalio, I just think institutions are finding gold a lot more interesting. And then there's these factoids that every $10 billion of gold demand equals a 3% move in the price. The dollar weakness is kind of stabilized. So a lot of this move has been, I think, institutional allocation. We got numbers out of China last month that said their gold holdings are at record highs and that their treasury holdings had fallen, reasonably. I don't think they're jumping fully out of the treasury trade by any means. But, these are dynamics that are all contributing. And yeah, silver looks fascinating just because I think there is that relationship between gold and silver. And if you look at silver relative to its inflation-adjusted highs, there's a long way to go in silver, but we're only now just breaking through the highs of 2011 when also what used to be kind of the old high water mark for gold.
Yeah, and of course, this gold trade is sort of being referred to as a debasement trade. But if we dig a little deeper in silver, there had been a sense that, or some speculation, if you will, that relationship, that correlation between gold and silver had broken down and wasn't working the way it used to anymore. Has that changed? Has that reversed again here, or is something else driving silver?
Well, I think silver has also, look, we know the industrial usage, but I'm not sure there's this industrial trend in silver. I think it really is diversification across PGMs and the asset class. Look at palladium, look at platinum. And I would just bring it back to where silver, that gold-silver relationship, if you look over the last 20 years, silver has underperformed gold by 40%. So you can do that ratio. I think this is a catch-up trade. And I think the same trends, though, that are supporting all PGMs are going to continue. I think you can be tactical here. You could trade gold down to maybe 37.50, but I wouldn't step too far off this train. Gold miners have a beta typically of 2 to 3 during the periods it's running. They've slowed down in the last few days relative to the metal, but gold miners' free cash flow yields, the upgrades are coming if not, haven't already happened.
You talked about dollar stabilization. What is driving that right now? How much of that is domestic versus some of the dynamics that we're seeing play out in other markets around the world, including political dynamics in places like Japan?
Yeah, good point. I think some of this is just central bank differentials are catching up. So there was a time the Fed was clearly leaning that much more dovish than the ECB seemingly was done. BOJ and what's going on there, they got a wage number this morning that was somewhat hot. I think they should be hiking, whether they do or not. Fiscal policy in Japan after Takaichi, after that dynamic, fiscal spending may be, part of buying Japanese equities and a weaker yen, and that tends to be good for Japanese equities. We are overweight Japan in IDIVO, so I like that trade. But dollar was also one of the most crowded, being short dollar was one of the most crowded trades going into this year, much of this year. Obviously, we're getting numbers in terms of the deficit. We're seeing some dynamics in terms of the White House policy here that may be a lot more dollar positive. I wouldn't say the dollar is going to run away back, higher here. And I'm not sure the White House wants it to be a lot higher, even though they may or may not talk about that.
So finally, the fact that we're 8 days into a government shutdown doesn't look like we have an end in sight, at least not yet. Are the markets behaving the way you would expect them to based on history?
Based on history, they are. And based upon, the headlines we're getting both in what have been market drivers in terms of AI and mega cap tech and whatnot, I guess I'm not terribly surprised. I'd say be careful because every time could be a little bit different. But no, based upon history here, I think we're going to, and we've also learned just what part of the economy is most affected. It's not reason to sell the market here.